So on Friday, collectively as a whole, we ended up having 11 wins in a row. I did end up going 4 for 4, and then I had 2 small losses on the SPY calls into the close. With that being said, you guys are well aware, if you've been following this channel, we've been capitalizing on a short-term trade where when the SPY has a 2-point breakout above the new all-time highs, it tends to have a small drop, right? Which is why one of the levels I gave you for puts was at 580, which was the exact highs on Friday. Now, with that being said, today's the day where that short-term trend that has been working absolutely phenomenally throughout the past month has finally come to an end. So the question is, did I adapt accordingly? Did I end up buying SPY call options when I had a 2-point breakout above the all-time highs? Yes, and I'm going to explain to you why. I'm going to be recapping the trades that I ended up making on the day, going 4 for 4, making multiple 100% proper returns. Not only am I going to give you the new money-making game plan, but I'm going to show you the reasoning behind every single trade that I ended up making today. So for those of you who are serious about making money and learning how to master trading the SPY, make sure you're subscribed to this channel. Let's get straight into the analysis. So in terms of the trade that I ended up making on the day, I'm going to be walking you through each trade, right? So we're going to start off with the foundation, and this is going to prepare you for the money-making game plan heading into tomorrow as well. So in the pre-market at 9:29 a.m., I made it very, very clear that calls on dip is likely going to be the play. You guys are well aware I'm not too big on being a morning trader, but in terms of the setup that appeared today, it made sense for me to trade in the morning, so I took advantage of the opportunity, right? So I made it very, very clear that calls on the dips is likely going to be the play. And then at 9:32 a.m., at the exact lows on the day, I ended up buying SPY 582 calls at 56 cents a contract, man. The calls were so cheap, and they weren't even that far out of the money, man. These calls were extremely cheap, man, considering how big SPY gapped up, and they weren't that far out of the money. I couldn't resist not getting in on this particular position, right? So in terms of the calls being extremely cheap, that was one of the reasons why I decided to buy call options, right? Sometimes if you study the option prices, they're going to give you a sense of direction if you know how to read it and how to take advantage of that. That was one of the reasons. I got in at 56 cents. I ended up selling 80% of my position at 91 cents, and I made it very, very clear to leave runners. This was a morning play that I had very strong conviction that it was just going to keep on running, which is why I said to make it very clear. In terms of runners, it's typically best to go at 20% of your position size to run. With that being said, I sold at 91 cents in terms of 80% of the position, and then I sold the rest at 156 cents for nearly a 200% profit return. After that, I had 3 more wins. In terms of puts, I only did puts once, and it was at the exact peak, the exact top of the SPY. I ended up bottom ticking these puts using this 30-minute strategy that I used on Friday. I'm going to walk you through it, man. So why did I end up buying these SPY call options? Why was I bullish at the market open? It starts with the daily chart. Then it goes into the 30-minute chart break and retest strategy. So in terms of the daily chart, what I did was this. I looked at the overall pattern. And in terms of the overall pattern, you can see right here on the daily chart, there's a red daily candlestick. And then what is SPY doing? It's having a slanted bullish uptrend to the right side, right? So you see how it's trending up to the right side. And then I want you to take a look at this candlestick. This candlestick right here, as you can see, if it looks like this, the next day, if the SPY gaps up, this is based on throughout the chart history, it's likely going to be a great opportunity to buy calls at the open. I came up with that by going back throughout the daily chart history. As you can see, if you look at this chart, right, it's the exact same setup I just showed you. There's a lot of similarities, and the history ended up repeating itself to an exact T. So you have this red bearish candlestick here on the daily chart, then you have a slanted bullish uptrend to the right side. As you can see, this daily candlestick right here looks nearly identical to the daily candlestick that I ended up showing you. As you can see the next day, if the SPY gaps up, it did not go back down to the previous closing price. It ended up having a massive gap up above the previous day highs, and it ended up being a great opportunity to buy call options at the open for a very strong bullish closing day. Meaning, if that history repeats itself, this is going to be a great opportunity to buy call options, right? And then also, just looking throughout similarities of how SPY reacts when it forms that daily candlestick, I went back throughout the chart and I analyzed many days where, as you can see right here, this is the same candlestick, the SPY had a bullish day the next day. This is the same candlestick, the SPY had a bullish day next day. This is the same candlestick, the SPY had a bullish day next day. The daily chart is going to help give you a foundation, whether it's going to be a bullish or bearish trend day if the pattern aligns, right? So that was the foundation. Now, in terms of confirming that that history was going to repeat itself, the confirmation was in the pre-market. I was looking at the pre-market and I was saying, dude, This is an absolute no-brainer. SPY is gapping up above the all-time highs. And I went back throughout that chart history and it said, if the SPY gaps up, it's likely going to be a strong bullish trend day where you buy call options at the open. Now, what I liked about this was it wasn't a massive gap up. Last time, using that pattern that I just showed you, it was a massive gap up and it was still a great opportunity to buy call options at the market open. So I looked at it as even a no-brainer to be buying call options at the open because it had a break above the previous all-time highs right here at 580, which was that key level I told you where SPY would likely drop first. Shortly enough, that was a great opportunity to buy put options on the last 30 minutes into Friday using that 580 key level, right? You guys are well aware, there's been a strong recent trend where the SPY has been having short-term pullbacks once it breaks 2 points above the all-time highs. Today was the day where it finally broke that trend, a pattern, and it kept on going. Using the daily chart, using the 30-minute chart, I was able to adapt accordingly and not buy put options. And I'm going to show you how I bought puts at the exact peak today. I only did it once and it worked out phenomenally. So the SPY had a break above the previous all-time highs. And it didn't have a massive gap up, which gave me even more confidence to be buying call options because I'm saying to myself, last time it had a massive gap up and it was a good opportunity to buy calls at the open. This time, the gap up isn't even that massive. So I feel more safe in a sense that it's not going to drop back to that previous closing price. And also, the options were extremely cheap. These weren't even far out of the money calls, and they were only 56 cents at the market open. If you measured the expected move, these could have easily went up 500, 600% plus. With that being said, the break and retest as the confirmation for the foundation that it's not going to drop back down to the previous closing price, confirming that overall daily chart pattern. So we had a break above 580. We had a break above 580, so you wait for a SPY to drop back down to the previous resistance. The previous resistance is right here at 580 to 580.30. If it reacts to support and continues to go up, that's very, very bullish. As you can see, it formed a new floor at previous all-time highs, which is bullish, and it started to retrace back up to the previous wick, right? These were all the confirmations for me to buy call options. I used the daily chart, and the daily chart said, if it has a gap up, it's going to be a great opportunity to buy calls at the market open. The way I confirmed it was the SPY had a small gap up, which is even better. That means it can have a bigger run throughout the day, and it's more safe in a sense, buying into a smaller gap up than a massive overbought gap up, right? And I analyzed that it had a break above the all-time highs. It dropped back down, forming a floor for an hour. It continued to trend up with nothing but green, bullish 30-minute candlesticks. Why would I be buying put options into these green, bullish 30-minute candlesticks, knowing the foundation of the daily chart is bullish on a gap up with that history repeating itself, knowing that the new all-time highs had a breakout and reacted as support? Puts makes no sense. But traders don't use the 30-minute chart. And I'm telling you, the best foundations to be having as a trader when you trade the chart is the daily chart. It set me up for this trade. Without the daily chart, I would not have had direction that today was going to be an overall bullish day. I used the 30-minute chart to confirm that the daily chart was going to work, right? So that's why I ended up buying call options at the market open. Very, very simple process. Also right here, this is an overall bullish pattern in a sense. And then, like I said, I ended up selling the runners at 156 cents, right? So in terms of the real-time trade alerts, like I said, we have real-time options trading alert systems that print at the speed of fucking light. My main system is that 30-minute chart, and then at times I use the daily chart as a foundation, and then I use the 30-minute chart to confirm the daily chart foundation to confirm the overall trend on the day, right? This is why I made it very, very clear to avoid puts for the entire day. So with that being said, at 9:32 a.m., I bought these 582 calls right here. I literally got in at 9:32 a.m. right here at the 56 cent mark towards the exact fucking lows. The lows was 52 cents. As soon as I got in, they go up to 90 cents in 3 minutes. You had 2 minutes to get in basically at my exact entry, which is more than enough time to get in on the particular trade. And then as you can see in terms of the runners, I ended up selling the runners, right? So this is where I sold 80% of my position for 91 cents for nearly a 100% profit return. And then I ended up selling the runners. So at 9:35 a.m. right here, this is where I got out. And then in terms of the runners, I ended up selling my runners at 9:49 a.m., which is right here in the 160 range. These contracts ended up going to 329 a contract. And I made it very, very clear to leave runners because the SPY is likely going to have a strong bullish trend day. With that being said, that was the reasoning buying calls. So you have to ask yourself, as a trader, How many people do you know of who are talking like this, who have this information, who see the market like this? This is how I see the market. This is what I created using the daily chart, using the 30-minute chart. This is how I trade. This is how I teach. I trade what it is that I'm teaching. This works, right? So if you've been following along with the videos and you understand how it is that I see and trade, you should have saw the same exact thing. Because I'm an open book, man. I'll show you exactly how it is that I'm trading, man. So that's how I view the market. That's exactly how I traded the overall market. It gets more in depth. It gets more advanced in terms of, well, why did you sell here? Why did you do this, right? Like I said, it made sense to leave runners because of the strong bullish trend day, but that was the overall reasoning behind that trade, right? So in terms of the next trade, let's get into this, man. So in terms of the next trade that I ended up having on the day, very, very simple. I'm going to walk you through this. So I ended up buying 584 SPY calls at 49 cents at 3:11 p.m. Why did I buy these SPY call options very close, into the opening of that 3 p.m. mark into power hour? I'm going to walk you through this. So we're going to go to SPY. I'm going to pull up the 30-minute chart. One of the reasons is the foundation. It said that SPY was going to close strong at new all-time highs. I had the bullish trend day foundation to be avoiding puts throughout the entire day, right? Now, in terms of the 30-minute chart confirming at that exact time, obviously on a bullish trend day, I'm going to be interested in buying the dips. I'm going to be looking for oversold dip buying opportunities. That's my main focus. If the SPY has a massive breakout, I would prefer to wait for it to drop back down to that previous resistance to retest, then use a confirmation rather than trying to chase that breakout in a sense. But it depends on a trade. Sometimes I'll look to get in on the breakout. Sometimes I'll wait for the break and retest. My favorite strategy in a sense is that overall breakout and retest. Now, with that being said, in terms of the breakout situation when buying calls, now 3 p.m., this right here, this is the opening. So I ended up buying call options 11 minutes into this 30-minute candlestick. Why did I end up doing that? Well, in terms of the overall chart, you're going to see right here, look at these patterns, right? So in terms of this pattern right here, it had a lot of similarities to do with this, man. So as you can see right here, you have this red trend reversal candlestick, you have this red candlestick. Then right here, you have this green bullish candlestick, you have this green bullish candlestick. Then right here, you have this green bullish candlestick facing to the downside, you have this green bullish candlestick facing to the downside, right? The next 30 minutes is a green bullish candlestick, and the next 30 minutes after that, it ended up pushing even higher. So looking at that pattern, it told me to buy the dips and sell the rips. Based off that pattern, the SPY is going to try to retest the high of the wick, retest the high of the wick. It's the same exact pattern. If you look at the chart pattern that I'm showing you, capturing the 30-minute trade, it was the same exact trade. So I was waiting for a dip to buy. Once it dips back down, I sell the rip. I sell into the highs of this 30-minute candlestick. That was the reasoning behind the call options. Very, very simple. And then in terms of how I break down the 30-minute chart, I break down the 30-minute chart using the 1-minute chart. That's my preference. So in terms of macro, the main macro I'm using is the daily chart as a foundation. Daily chart and weekly chart could be a macro for me. And then in terms of my micro intraday trading chart, right? So I can use the daily chart and the weekly chart as a foundation to set myself up for a bullish or bearish trend day. Not all the time. Sometimes the trades are purely intraday based just with the 30-minute chart. But the macro side is the daily chart and the weekly chart. And then in terms of intraday trading with confirmations, the 30-minute chart and the 1-minute chart. That's how I prefer to trade the chart, right? The 5-minute chart works very, very well. In terms of my main preference when the intraday chart, it's mainly the 30-minute chart more macro and the 1-minute chart more micro. That's what I find to be the perfect balance, right? Obviously, within these videos, I haven't really been breaking down the 1-minute chart. It's more of just the 30-minute chart focus. But I ended up buying these calls here towards the lows right here, as you can see. So in terms of this overall trade that I ended up making at 3:11 p.m., this is where I got in right here at 3:11 p.m. towards the lows. And then in terms of when I ended up exiting these calls, I made it very, very clear right as soon as I got into trade. Nothing changes. We are on pace. We are on pace to close at new all-time highs, right? And then I ended up saying to take the profit at 585, which was the exact highs on the fucking day. And I ended up selling at 74 cents a contract at 3:38 p.m. So I ended up selling right here, and they even went to 120. That was the reasoning behind that. And I also made a trade on SPX calls. Right? So in terms of the reasoning behind this SPX trade, it was basically the same exact reason. I just waited later. You're always going to see me. If I'm bullish on a 30-minute candlestick, I'll buy SPY calls first during the power hour because it's cheap and low risk, right? But the SPX calls, you have to time those more perfectly. So on SPX, I usually wait till 3:30 p.m. when they're a lot cheaper, and I'll always get in SPY first. So we were getting close to that time of 3:30 p.m. I decided to go with the SPX 587 calls at 70 cents at 3:21 p.m. These particular calls, I ended up getting in on these right here towards the exact lows. This is where I got in right here. and this is where I ended up selling. I ended up selling towards that, as you can see right here. So let me pull this up real quick. So I sold those at 135 cents a contract, literally making like 100% on those. And then the trade before that was a very nice win as well. So I had 2 trades on calls, 2 different trades, same size. Those went to 440 a fucking contract, man. All of the trades exploded, right? So that was the main reasoning behind the SPY and SPX calls. But I want to show you this, man, because this had another reason to do with it. I'm going to go back and I'm going to disable extended hours just so you can see this clearly. And I'm just going to remove this here real quick. So let me show you in terms of this strong recent trend that I've been capitalizing on. It has to do with the 30-minute chart. This was the reason on why I was bullish for the last 30-minute candlestick. And this was more of the reason why I took the SPX trade later, because this 30-minute candlestick was closing bullish. And if this 30-minute candlestick closes bullish like this, next 30 minutes is going to spike, then it's going to drop. So I'm going to walk you through this, man. This is the overall pattern. This pattern has formed 3 times throughout the past 10 days, man. So I'm always using the 10-day, 30-minute chart, capturing these patterns, waiting for them to develop. And I'll use the daily and weekly chart to set myself up for a foundation, whether it's going to be a bullish or bearish trend day. And I take what the market gives me. Sometimes the market isn't going to give me an opportunity to identify if it's a bullish or bearish trend day using the weekly or daily chart. So then I just wait to use the 30-minute chart using the 30-minute strategy. The best days can be when the market gives me an opportunity where the daily chart is setting up as the foundation, and then I use the 30-minute chart to confirm that foundation of a bullish or bearish trend day. Those tend to be the absolute best. So if I'm not using that daily chart, if there's no pattern, I'll just use the 30-minute chart, wait for the perfect patterns, typically later on throughout the day. In terms of me trading early in the morning, it's mainly if there's a strong daily pattern confirmation or even weekly chart confirmation that I'm seeing like I saw today. It's more of a rarity, right? So if you have the education, you have your third eye open, you just need to be aware and be disciplined to wait to trade these setups. Now, with that being said, look at this pattern, man. I'm going to walk you through this. As you can see right here, SPY has a green bullish candlestick facing to the downside. SPY has a green bullish candlestick facing to the upside, right? What happens next 30 minutes? Well, if you go back to Friday, it tells you the story. If you just looked at Friday's fucking chart, it was the same trend. You have a green bullish candlestick facing to the downside. You have a green bullish candlestick facing to the upside. Next 30 minutes, it says to buy calls it open, sell the rip towards the retest, sell into the breakout. When it starts breaking above the previous 30-minute highs, sell the rip, and then it's going to have a small pullback, going to start to drop, right? That trend, that pattern has been repeating itself multiple times throughout the past 10-day, 30-minute chart. That's why if you just wait for these 30-minute charts to develop, look at this. Here it is again. Are you seeing this? You have this green bullish candlestick facing to the downside, green bullish candlestick facing to the upside. Next 30 minutes is bullish, has a breakout, and then has a small drop, which is, again, one of the reasons why I did puts at the very fucking end, because I was looking for that small drop. Once it starts to break above those previous 30-minute highs, small drop into the close, you can run up a big percentage gain on SPX within the last 10 minutes. Very, very cheap, very, very low risk, right? And you're even going to see the same trend. I literally went over this in the videos. If you went back and watched the videos, man, it's like I show you all the trends. If you have your third eye open, you should be capturing this in real time. To be self-sufficient, you should be able to trade exactly how it is, the way that I'm trading, man, using the 30-minute chart, using the daily chart. So I'm going to go into the pre-market. I'm going to show you this exact trend. Look at this. This was in the pre-market. Remember this? I walked you through the videos. Bullish candlestick facing to the downside, bullish candlestick facing to the upside. Next 30 minutes is bullish, and then has a small drop on the 30-minute candle. Do you see how many times that has repeated in the past 10 days? How many times did you take advantage of that opportunity in the past 10 days? Who do you know is teaching you this information? Because you're going to see what I teach, I trade. What it is that I teach, and it works. I'm the creator of this. You're going to see other people, they're going to come. They're going to try to do exactly what it is that I'm doing. They're going to try to talk like me. They're going to try to walk like me. They're going to try to act like me. They're going to try to trade like me because it works. You understand? Just remember who you learned this from, because I'm the one who created this. If it stops fucking working, I'll rebuild the whole fucking system myself because I know how to see the fucking market. You don't need to know the names of these fucking candlesticks. You don't need to read books to figure this shit out. I figured out by the way of viewing the market. I know how to interpret the market. I know how to view the market. When you're trading and watching the market from market fucking open to market fucking close for 10 fucking years, experimenting like a mad scientist every single day, putting in tens of thousands of hours throughout the past decade, you know how this shit works. You start to figure it out when you're backtesting all these different strategies. And I'm being very honest with you. The 30-minute chart is the best system that I'm seeing. All you need is one system that works, that can get you a very successful that can make you very, very profitable with a very low win rate. That's what every trader should strive for. Every trader should strive for a strategy that allows them to be successful with a very low win rate, as low as 30%, right? And have a system that feeds you enough. So in terms of this system, I'll typically find 2 to 3 trades every single day. Some day there's no trades, but typically there's at least 2 trades a day. Other days, there's 4 trades, there's 5 trades, there's 6 trades. It averages out to 2 to 3 trades a day. That's all you need. And we're trading the most lucrative setups, the cheapest, lowest risk setups with the biggest percentage gains in the fucking market. And I'm showing you exactly how it is that I'm doing it. So that is why call options. And I explained to you, I showed you the 30-minute chart, and I showed you it tends to have a small drop once it breaks above the previous 30-minute highs, right? So once the SPY started breaking above my take profit target at 585, and this is just some of the basics, I'm measuring the moves. I'm looking at these 30-minute patterns and I'm measuring the moves. I'm saying, okay, if this pattern repeats itself, where's it supposed to bottom? Where's it supposed to top? What is the dollar amount? How many cents? I measure the moves. That's how I come up with these take profit targets, by looking back throughout the previous patterns and measuring what it does the next 30 minutes. Where does it bottom? At what point does it bottom in time? What are the key timeframes? You got to know the algorithms. You got to know the key timeframes as well for where the algos are. Now, with that being said, in terms of the puts, I ended up buying these puts at the exact lows. So I went over the reasoning behind the SPY calls. Remember, I took that SPX trade once this 30-minute candlestick was about to close bullish, sold the fucking rip. That was the plan. Everything fucking worked to a fucking T. Now, with that being said, in terms of the puts, man, why did I buy puts at 3:48 p.m.? So SPY puts, very, very cheap, very, very fucking low risk, only 32 cents a contract. Ended up running up like, 50% profit return at the speed of light. Sold in 2 minutes. Look at this, man. At 3:48 p.m. I'm in at 3:48 p.m., right? Our traders, they have their option chains open and ready. When we call a fucking play, they're ready to take action. You got to be quick. You have your option chains open and ready. You take action on the fucking play. 3:48 p.m. So in terms of 3:48 p.m., we go to SPY 585 puts. Look who's in at the exact fucking lows. You understand? Every single time I bought fucking calls, it was at the lows today. 3 for 3. Every single time I bought fucking puts, once, who do you know is doing that? Bullish trend day, buys calls at the fucking lows 3 times, buys puts at the fucking lows. Who do you know? Who do you know? What other fucking trader is doing this? I do everything in real fucking time. I give them the plans before I enter the trade. I walk them through the trade when I'm in the fucking trade. I give them my entry. I give them my fucking exit. Everything is 100% in real time, man. Look at this. 3:48 fucking p.m. The exact lows. I'm in towards the exact fucking lows. 2 minutes later, the contracts go from 20 cents to 60 cents. That's a 200% ROI in 2 fucking minutes. 1 minute is more than enough time to see an alert and enter a trade. You got to be fucking fast. You got to have your option chains open and ready and buy at the fucking market open. Get in, get out, take the fucking profit. So that's what I did, man. The reasoning behind that overall trade, I showed you the 30-minute chart. Every single time the SPY formed that pattern where it has a green bullish candlestick to the downside, green bullish candlestick to the upside. Next 30 minutes, it's bullish, but it has a drop. This time it ended up flipping bearish. So it was even more lucrative for put options in a sense, right? And then after that trade, after going 4 for 4, I took a loss on calls because based off the pattern, it was supposed to close strong, but it didn't. So it is what it is. 4 for 4, and then you take an L. It is what it is. If you have 4 wins in a row, if you are up nice on one trade, you have 1 big win. The morning win was a big win. If you have 1 big win or 2 small wins in a row, you should be green enough, even if your account is small, to call it for the day. So once you're green enough to call it for the day, the max risk per trade is 50% at the very most. If you want to be more conservative, you risk 25%. Obviously, with a smaller account, the less you can afford to risk. You know your account size, right? But the point is, when you have 2 small wins in a row, or you have 1 win that's big enough, right? That's good enough to walk away for the day. You should have exceeded some sort of goal, or you should be up enough to walk away. If you choose to continue to fucking trade, you risk 25 to 50% of your trade. If you keep on trading and you lose that max risk, you're still green on the day. And from there, you have to call it, because then you're risking going green to red, which is no bueno. Now, with that being said, that was the trade behind the put options. I showed you the 30-minute chart. I showed you how it overall tends to sell off, right? And just psychologically, when it's that nice 585 whole round number, it's just due for a drop into the fucking close, right? So that was the reasoning behind that. Now, in terms of the daily chart on the SPY and in terms of what we're looking at heading into tomorrow, this is what I have to say. based off of the daily chart pattern in terms of the foundation that I'm seeing for tomorrow, right? Because in terms of creating these levels a day before the market opens, making this video in a sense, it becomes a little bit more difficult when the market just keeps on pushing for new all-time fucking highs. But based off the pattern that I'm seeing right now, right? If it gaps up, it's gonna keep on running. So this is another situation. If we are gapping up, if we are opening up higher than the previous closing price, 584.32, I'm going to be looking for opportunities to be buying call options, right? So with that being said, man, if we're seeing a nice gap up and we're seeing something similar where let's say the SPY is forming support above the previous highs, 585.27, we're seeing some sort of 30-minute confirmations in the pre-market, or say we're seeing new resistance levels in the pre-market, SPY is a nice breakout above those resistance. If it drops back down to those levels, then I'll be interested in buying call options at the new higher levels using the breakout and retest strategy, right? That's the overall game plan. So if the market is gapping up, it's very unlikely we go back to previous closing price. If we do, that's make or break. Now, if the market is gapping down, if we are having a small gap down, it's likely going to be a good opportunity to buy put options. If SPY is gapping down and we're dropping under 584.32, opening up lower, right? I'm going to be interested in buying puts slightly below or even at the previous closing price. That's going to be the game plan. Gap down, looking for puts at the previous closing price. Gap up, looking for calls at the previous day highs or at new resistance formed in the pre-market, make or break previous closing price. Very, very simple. If we see a small gap down, the market's likely going to close in between towards the red of the day, making the best opportunity for puts towards the previous closing price based off of what I'm seeing in the daily chart. The way that I came up with that is I went back throughout the daily chart history and I simply analyzed how the SPY normally reacts, right? So you can see right here, this was the pattern, it gapped up. Well, the next day, if it gaps up, you can see right here, if we have a gap up, it's going to have a strong push up, except this time, if we do gap up, it could have a bigger drop, right? So in terms of measuring that overall move, it's going to be more difficult since we're pushing for new all-time highs. In terms of last time, you can see 531 to 536. But again, you can also go percentage-wise and not just by the dollar gains because SPY is at a much higher price now. In a sense, that's where it gets a little bit more complex in terms of measuring these overall moves. But it's a little bit more difficult when the market's pushing for new all-time high to measure a move. One thing you can do in a sense is just wait for the market to crash. And then if it has a double top and you're seeing on the daily chart that it's likely going to lose gains, look for the bearish 30-minute candlesticks at the double top. So if we gap up, the play is going to be calls it open. And then we're going to look for an opportunity for puts. In terms of the exact entry, it's going to be a little bit more difficult in terms of measuring the overall move. What you can do is wait for the market to have a pullback. And then if it has a double top, there's your entry. If it doesn't have a double top, you miss out on the fucking play, but at least you know where to fucking enter in a sense, right? Sometimes measuring the move gives you an exact entry, but in this situation with the market hitting new all-time highs, it's more difficult to measure the move now, especially since we had a break of trend. It's no longer topping at that 2-point fucking breakout. So if we have these gap ups, it's going to keep on fucking ripping up. Then it's going to have these nice little drops. So the way to capture those nice little drops, you can wait for a double top situation with the 30-minute bearish confirmation, or you can wait for the perfect pattern and try to time it the first time, right? And you also have to be aware of the times, right? So if the market's due for a drop on a gap up based off the pattern, one way to time that perfectly, if it hasn't dropped yet and we're heading in close towards the end of the day and you're seeing bearish confirmations, it's likely going to be on the top because there's bearish confirmations. It hasn't dropped yet, so there's not much time left, and it's due for a fucking drop, right? That's just common sense. You could write all this stuff down. This is how I'm thinking in a sense in terms of how I view the market, right? So gap up, calls it open, and then I explained to you how to look for the entry, and then look for a drop. It could be the double top, or if it's later into the day and we haven't dropped yet, look for the bearish 30-minute confirmations, right? And if we gap down, very fucking simple. Puts at the previous closing price, slightly under it. And also, there will be a play on calls. If we gap down, look for calls at 582.20. Also look for calls at 581. That will be the game plan strictly for tomorrow. Very, very simple. Based off of how the market is setting up, there is a strong daily pattern that has been repeating itself very, very consistently. I'm going to continue to capture and milk this trend to an exact fucking T. Not only do we know how to capture trends in real time, and you don't have to be the first one in the market to capture a trend to make very lucrative profits, you can actually be the last one and trade just during the power hour, which is the best time to trade with the highest risk reward ratio. If you're using a real broker that allows you to trade 0-date option contracts, that doesn't, literally get you out of the contracts into the last 30 minutes, that allows you to hold, right? Just use a real broker. Like I said, Thinkorswim, TD Ameritrade, look into Interactive Brokers as well. Great brokers to use this overall trade alert system, right? This is the best style of trading. If you want to trade with us, it's the first link down below within the description. What you gain access to is our real-time trade alerts, our real-time trade analysis, a zero-day options trading alert system. What we do is we buy cheap, far, low risk, out of money option contracts. We're known for selling them deep in the money, and we make the biggest percentage gains within the market. And we have the highest win rate in the game. Doing this, it's above 90%. With that being said, if you want to join us, it's the first link down below in the description in terms of some background to the system that we've created. We are known for not using stop losses. The contracts are so cheap, so low risk, designed for not only small accounts, but for rich people who prefer to pay less, risk less, hold their trades a little bit longer, and make the biggest percentage gains within the market, which will also make you the biggest dollar gains within the market with the cheapest, lowest risk, right? These contracts are going to give you the biggest fucking leverage you're going to see within the market and options, the VAR, the money option contracts, right? So with that being said, we don't need a stop loss. They're very cheap. They're very low risk. At the very most, you can put in your max risk per trade into these contracts, right? So if you put in your max risk per trade into the contracts, and you could even put in less into that, depending on your account size, you could just go in with one contract, right? Because we're making 100% gains, 200% gains during Power Hour. We have 500% trades every single month. We have 1,000% gainers, right? We had a trade today go from 50 to 320. With that being said, you can put in your max risk per trade at the very most. So if the contract goes to zero, you know exactly how much you're going to lose. That's the beauty of options. Whatever you put in, that's the most you can lose. You know exactly how much you're going to lose. And if it expires zero, goes worthless, that's your max loss trading these naked options. Now, with that being said, right, you can put in your max risk per trade, meaning the most you risk is your max risk per trade, right? Now, with that being said, a stop loss is not needed because our max risk per trade is in the trade at the very most. We don't need a stop loss, right? Now, we will look to sell the moves. If we're down 30, 40, 50%, in certain situations, it makes sense to cut the loss. Now, other times, we won't cut the loss. We won't cut the loss because we have an entire day for the contracts to go in the money. And if it makes sense in terms of the trade that appears, we'll hold it because there is a good chance in terms of 70% of the time when doing this, when it makes sense to hold a dead play is a play that drops 50%. It makes sense to hold when it makes sense. And we know when it makes sense because we have the strategies, we know the trade setups, right? Because it tends to come back to life 70% of the time to go in the money, start making some serious gains on a dead play that's down 50%, right? Another reason why we don't like using stop losses is we know where your stop losses are, right? We'll hunt you. We know exactly where people are going to get stopped out. It also gives us an idea on where to enter in a sense, knowing where other people's stops are. And I don't believe in that. I don't believe in getting stopped out automatically in a sense, especially on the losing side. I like to see how the trade reacts at my level, right? But some traders, they're sizing in so fucking big, or they were just taught to lose and use a stop loss. They just want to get stopped out. They're so fucking big and they sell for such small fucking wins, trying to make some dollars instead of percentage gains because they don't know how to hold their fucking trades. You want to make big percentage gains in the market, I'll tell you. The only way to do it is to buy something that's cheap, is low risk. You either buy a penny stock or you buy options. But if you compare penny stocks to options, options have 10 times more fucking opportunity and they're 10 times better than fucking penny stocks. You don't need fucking scanners and you can master one ticker, just SPY. I'm telling you, with a 30-minute chart, I've tried it on stocks. It works best on SPY. SPY has 0 dates every single fucking day. SPX has 0 dates every single fucking day. This is new. It wasn't too long ago, a few years ago, there was no 0 dates on fucking SPY, man. You look at all the fucking stocks, a lot of stocks, there's 0 dates on Friday. And then some stocks don't even have the 0 dates on Friday. It's different, right? You master one ticker. And what I'm telling you is, I've dedicated years and years, and I've found that SPY is the best ticker to fucking master. It is highly predictable to master. Is a big edge when you master trading one ticker. And I'm telling you, using this 30-minute chart, using what I teach, 2 to 3 single trades every single fucking day. That's all you need with the right system. You can have many trading systems, but all you need is one system that works. You find a system that works. You become disciplined enough to stick to that system, to be aware. Being aware means if there's not a play, you don't trade, right? If the market isn't giving you something that correlates with your system, that means you're not trading that system that feeds you. And if you don't trade the system that feeds you, you're not going to be able to scale because you're going to be losing your money, not being disciplined or not being aware. Sometimes, if you're not even aware, you can't be disciplined. How the fuck are you going to be disciplined if you're not aware? You got to be aware first, then you become disciplined. When you know what to look for, when you have your third eyes open, you can then be disciplined within the market, right? But how the fuck are you going to be disciplined If you don't have any awareness, if you don't know what to look for, if you don't got the fucking system, what are you going to be disciplined for? What are you doing? Fucking gambling? It makes no fucking sense. Discipline for what? If you have no strategy, no system within the market, you don't know what to look for, you don't have the setups, what's the fucking point of the discipline? What are you going to do? So with that being said, man, we trade less and we make bigger profit. And another thing we do is we set profit stops. When we are green on a trade, we set a profit stop to ensure that we don't go green to red. Losing is a choice. If you are green on a trade and you set a profit stop, it's impossible to go fucking red. You get stopped out for profits. But you hear everybody else talking about stop loss. Oh, I got to set my stop loss. Well, a stop loss doesn't prevent you from losing. You know, it has the word loss in it. That means that you get stopped out for a fucking loss. And most people who use stop losses are buying something that's higher priced. They're going within the money options that cost more. They're buying shares that cost more. If something costs more, you put in more equity. If something costs more, it typically means less percentage gains. Less percentage gains mean more dollars. More dollars mean you have to put more dollars in to make big dollar gains, right? This is why they use a tight fucking stop loss, because they're going in so fucking big to make some money, or they just don't know how to hold their fucking trades. If you know how to hold your trades, you're going to learn how to buy cheap, far low risk, far out of money option contracts, because everyone knows this is the best system to master within the market. You can do this with small accounts. You can do this with large accounts. Like I said, if you know how to hold your fucking trades, you pay less to make bigger percentage gains. I know how to get in and out within seconds. I don't feel the need to fucking do that anymore. What's the fucking point? Why would I size in so fucking big and make such small gains with a shit risk to reward ratio, using stop losses and having this fear of fucking selling and getting stopped out so fucking quickly with no chance of the trade to fucking run because you size it in too big and you don't know how to hold your fucking trades? That's why people use stop losses. That's why people have such fucking fear when they're down. They don't have a system. They don't have a high win rate, but fuck the win rate. If you have our system, you're going to realize, dude, I don't even need a fucking high win rate. I could be 30% with this. Any trader knows the best system to optimize for is something that allows you to survive in conditions where if it's just not working out and you have a low win rate, you could still be profitable, man. That's what to optimize for. The market is what you make it. And you have to ask yourself, at the end of the day, what do you want to make this for you, right? If you are someone who's observing and trading within the market, what do you want to make it? Do you want to make it you versus you? Do you want to make it, okay, I want a more systematic approach. Okay, I want something that's cheap. I want something that's low risk. I want a system where I could be profitable with a low winning percentage. I want something that's cheap and low risk that has low barrier to entry. Therefore, if I have a small account, I have a chance to survive within this overall market, right? In a low risk type of way, right? And I could be successful with a 30% win rate, right? And if I'm richer, well, I can learn how to hold my trades for longer periods of time, and I could pay less and I could risk less, and I can not only make bigger percentage gains on my money, but I can also make bigger dollar gains than the people who are sizing in very fucking big, right? Going with something in the money, paying more for something. They're selling super quick. They're using tight fucking stop losses because they're putting in so much fucking money into the fucking trade. If you're putting in that much money into the fucking trade, well, you need tight fucking stop losses or you're going to lose a fuck ton of money in a sense, right? Unless you're holding for a massive fucking win in a sense. But with this, you don't need to put in, you risk less because you're not putting in as much. And the percentage gains are doing all the fucking work for you. I'm telling you, man, this is the top tier of fucking trading. It takes people a fucking decade to get to this fucking level, man. There's levels to this shit, man. And it all depends. What system do you want to optimize for? Do you want to trade with real money? Do you want to trade a profit firm? If you trade with real money, what do you want to do? Do you want to buy in the money options? Do you want to fucking get in and get out and use a stop loss and sell for small fucking wins? That ain't gonna fucking add up, especially if you have a small account. With that type of strategy, you're gonna need a fuck ton of money, and it's not the best strategy to master. I'm telling you, the best strategy to master within this market is to learn how to hold for bigger wins, which is why you see me using a daily chart foundation. A daily chart foundation is a macro trend. If I use a daily chart pattern and I know how to confirm that if it's going to be a bullish or bearish trend day, that means with the proper confirmation of the 30-minute chart, I'm confirming that a daily chart pattern is going to be bullish or bearish, meaning I can play for the entire day's trend. So if I hold for the entire day's trend and I know how to enter, measuring the moves, using the daily chart pattern, using the 30-minute chart, then I can hold for longer periods of time, right? I can trade the 1-minute chart. I can trade the 2-minute chart. I can trade the 5-minute chart. I can figure out all these fucking time frames. I back tested every single fucking time frame. And I'm telling you, the best foundation that I found throughout the past 10 years is to use a macro time frame to identify bullish or bearish trend days, such as like the weekly chart or the daily chart, right? And you can also explore and look into other time frames, right? To identify what works best for you. I'm telling you what works best for me and what I've seen to be get and yield the best results, right? Because that's what I want for you. I want you to get the best results within the fucking market. And I'm telling you, the daily chart and the 30-minute chart is the best fucking system that I've created. And it's so simple. It has so much simplicity in this overall system, man. So look, you get to decide what you want to make out of this market. Some people, they just want to have fun. They want to trade with friends. They want to make some money here and there. They're not serious. Other people, they say, dude, my time's worth fucking money. Understand? My time's worth money. I want a systematic approach. If there's traders out there who could be successful with a 30% win rate, I want that. I want to figure that out. If I'm going to dedicate all my time into the fucking market, if that's what I'm trying to do, be the absolute best I can fucking be within this market, then I want to be the absolute best. What's the absolute best? Figure out a trading system where you can be successful with a low win rate. Figure out a trading system where you can be successful with a small account. Say you have a large account and shit hits the fan. Now you have a small account. Well, you have a system that allows you to grow that small account. If not, then you better figure out a way to get some money up if you want to keep on fucking trading, or then you got to go the prop firm route if you don't want to trade with the real fucking money, right? But that's a whole different story. I'm not getting into prop firms. With that being said, man, figure out what you want to optimize for. If you're putting your time and effort into the market, optimize for systems that are working and then get strategic about it. So in terms of this system, you know, if you sit and you observe the market, it's going to make you the best trader in a sense if you have your third eyes open and you're disciplined, right? But you don't have to do that. You can just wait for these 30 fucking candles, 30-minute candlesticks to close. You know, I can literally just wait for every single 30-minute candlestick to close, and I don't have to watch the market all day. I could do that. I could set alarms and I can get a notification every single time. Okay, let's say I want to be notified 3 minutes before a 30-minute candlestick closes. Well, that's a systematic approach. That means I'm trading in a more systematic way where I'm saving time. Now, do I think that's going to yield the best results? No, but I do think it's more passive and it can work very, very well, and it could save you time with this 30-minute system, but you got to do the daily chart homework before that, right? So create a systematic approach. Strive for something where you can be successful with a low win rate. And from there, once you figure out how to be successful with a low win rate, you could figure out how to increase the win rate, get the icing on the fucking cake, man. I'm telling you, the win rate's the least important thing. What should be most important is figuring out how to be successful with a low win rate. And you have to buy something that's cheap, that's low risk, and that can go up the biggest percentage gains within the fucking market. So if you're trading with real money, and if you look at that overall situation, there's penny stocks. That's not the fucking move. The move is far out of the money option contracts. And the move is trade far out of money option contracts on just SPY. And then towards Thursday, towards Friday, when contracts get cheap, you can look more into stocks when they're getting ready to expire worthless, right? And they're getting ready to become 0 day on Friday for some of the stocks, right? Look at the top 10 holdings on stocks. Look at stock setups that correlate, but you don't even need that. Master one fucking ticker. I'm telling you, you master SPY with options. This is the best fucking strategy I've seen on the fucking planet. It's going to continue to get better, right? So you can go back. You can look at the evolution of my overall channel. You're going to see I started off in terms of this channel. I started with penny stocks, and then from there, I switched to options, and you're going to see with the options, I ended up making very small gains at first, man. I ended up making very small gains, 5, 10, 20%. I know for some traders, that's good for them, right? It used to be good for me. Well, now we're at the top fucking tier. Now we're at SPY, 1, 2, 300, 400, 500% returns. Leaving runners, 500% return, 1000% return, right? SP fucking X, well, SPX, 200%, 500%, 1000%, last 30 minutes. We have the whole system. We have the 30-minute system on the power hour chart. I'm telling you, this is fucking genius. Optimize for this. This is the best system. If you want to trade alongside with us, because the way to learn how to trade is to actually trade, right? And if you trade with us, you're actually going to learn how it is that I'm trading, especially if you're watching these videos and applying what it is that I'm saying within the chat, with the real-time analysis, with the game plans, with the real-time entry and exits, right? And we have a system where we set profit stops to ensure that we don't go green or red, and we move our profit stops up. The reason why we move our profit stops up is to ensure that if the market has a big move against us, we get stopped out for the bulk of our profits and don't just stay green, but we get the bulk of the overall move, right? Not giving back the vast majority of the gains, just staying overall green on the trade, right? But in terms of my main preference, right? That's like some foundational pieces to the system. But in terms of my main style of trading, it truly is, in terms of the sell, it's mainly selling moves. Now, I do encourage people to set a profit stop, but in terms of like moving that profit stop up, I'm more of just like selling the moves. I know exactly where to sell. I know my take profit targets, measuring the move and using the 30-minute chart. I have systems that tell me exactly where to fucking sell. There's other systems I have that tell me it's not going to tell me where to sell in a sense. Well, in a sense, that could be more useful to move your profit stop up. But for the vast majority of my trading, I stick to the most measurable and predictable systems. And in terms of my system, it tells me exactly where I should be taking profits and where I should be selling and on what trades I should leave runners trying to make, 300, 500, 1,000% on that 20% of position size to ride, right? So you need to understand, man, in terms of this market, the competition, the bar is up fucking here, right? And who's going to try and get it? I'm telling you, man, I put in the most time into this, and I'm going to continue to develop and work on creating the best system I can possibly create. And this is some of the basic foundational pieces that I've come up with, and I've applied it with the overall best trading style. You can apply this style of trading with prop firms. You can do it. If you don't want to trade with real money, you could do this with prop firms. You could do this with futures. Within time, I already know there is, but I'm not going to be speaking on it. But within time, there's likely going to be more prop firms, even with options. But again, I'm not getting into prop firms. We focus on trading with real money in terms of the future. Like I said, maybe I'll speak more on it. But we trade real money, and we trade far out of the money option contracts. We're known for going far out. We're known for selling deep in the money for the biggest percentage gains possible. You can use this price action on any fucking, right? You can use these strategies I'm teaching you on stocks. You can use it on penny stocks. You can use it on futures. You can use it on whatever the fuck has candlesticks. I'm just telling you what works best. And what I think is the best as of now is this far out of the money option strategy with this overall price action. And just trading one ticker. And I'm telling you, man, if you master one ticker, if I trade SPY every single fucking day, well, a couple years go by with the right third eye, with the right mind, being a fucking genius trader, or having the right mentor alongside you. In terms of me personally, I've never had a mentor. I figured this out on my own, right? So with that being said, a mentor can really help speed up the learning curve if you're learning from the right person. But I'm telling you, man, I'm just really looking to make you self-sufficient. That's the goal, is just to really make you self-sufficient, where it's you versus you, and you know exactly what to look for and what to do in that overall sense. It should get to a point where you know exactly what it is that I'm thinking, and you start trading exactly like me, man. I mean, I think you can get to that overall level where it's that simple, but it's going to take a lot of fucking time and a lot of studying and a lot of fucking work and a lot of dedication, man. I'm telling you, there's already other companies, they use and teach exactly what it is that I'm doing, and they give me no fucking credit. They give me no fucking credit. They give me no fucking respect. It's a part of this game, man. There's a lot of fucking shitty people in this snake fucking oil industry of the fucking stock market, man. Like I said, you can make anything out of the fucking stock market. That's what some people choose to make out of this, to fucking take other people's work and give them no fucking credit, no fucking respect, no appreciation. It's all fucking good, man. Just remember who creates this, right? If this stops fucking working, I'll reinvent the whole fucking wheel, right? Might take a short-term hit on the account because it's no longer working. Well, you become a little bit self-aware and you recognize to stop fucking working, you stop fucking trading, or you size fucking down and you rebuild the whole fucking wheel, man. I'm telling you, man, if you see the evolution of how my fucking trading has developed, I used to just get in, get out, small fucking gains. And then all of a sudden, I became the fucking best. But it took like fucking 10 years to happen. It was one of the situations where it almost looked fraudulent on how fucking good I became in such a short period of time. It's like fucking doing the same fucking thing for years and years and years. And then over fucking night, becoming a fucking SPY SPX legend, making 100% gains, 300% gains, 1,000% gains, buying the contracts at the fucking lows. I show you the fucking trades, man. Who do you know is doing this, man? Because I'm telling you, once people start to master this from me, they're going to start fucking multiplying. That's what they're going to fucking do. And they're going to try to do whatever it is that they want to do. Some of them will teach their friends. Some of them will teach their fucking families. Some of them will try to start their own fucking businesses. They won't give me any fucking credit. It is what it fucking is, man. Just remember who creates this stuff. So if you want to learn from me, if you want to trade with us, it's the first link down below within the description. And I'll show you, and I'm telling you, man, you join this fucking group, you're going to see it's unlimited fucking winning. Who has these real-time trades timestamps, man? This is everything I'm doing in real fucking time, man. We learned everything it is that we're seeing, that we're doing, that we're thinking in real fucking time. I give you the fucking game plan. I teach you how to do this. Like I said, man, it gets to a level where you should know exactly what it is that I'm doing and thinking. And then in terms of that, all I would ask for in return is that you give me credit and respect. In a sense, if you're going to tell your friends and family and, show other people, well, don't forget where you came from. Don't forget where you learned this from. So with that being said, it's the first link down below within the description if you want to trade alongside us. With that being said, we're going to absolutely crush tomorrow. We have the perfect game plan. We will continue to crush it. Like I said on Friday, I went 4 for 4. Giro had 6 wins. Uncle Tio had 1 win. That's fucking 11 wins in a fucking row, right? Like, all we do is fucking win because we have a system that works, and we applied this system with price action that works with what I believe is the best way to fucking use it. FAR, add the money option contracts. Who knows? Maybe in the future we'll test it and we'll switch it with something else, right? I know some people, they use this, so we have members in the chat. Some of them use prop firms. Some of them trade futures with this, right? It is what it is. People have their own ways of doing this, right? In terms of me, I've mainly just been doing FAR, add the money option contract. In the future, who knows? Maybe I'll experiment with something else. But this is what I found to be works the best, and this is what I have the most experience in, right? But you can use this with prop firms. You can use this with futures if that's what you want to do, right? It works. You just got to learn it and implement it. And like I said, this took me over 10 fucking years to figure out. But the crazy part is, once I actually figured this out, it's like it happened overnight. It's just one of those crazy things. It's like some of you may have heard of like overnight success stories. The way it worked for me, it's like I was good. But when I became like the fucking best, it basically happened overnight. And then once I became the fucking best, it took some time to adjust, to become aware, to understand what it is that I have, to understand my genius. And then, of course, to create the system. Once your trading elevates to a new fucking level where you're like the best, you start to become more systematic in your approach to price action. What's the best tickers to trade this on? If you're like the king of fucking price action, well, what's the best option contracts to trade this on? What's the best times? How can I make the more strategic system with this where I can be extremely disciplined? Okay, I'm going to wait for these 30-minute candlesticks to close, right? Once you realize what is that you actually have, once you level up to like that maximum tier, it becomes more of a disciplined and systematic and awareness approach. I'm telling you, when you have everything laid out and you remember what it looks like and you know what to look for and you have the plans in place and you're disciplined and you're aware, it's very simple to follow an overall system. I use the daily charts as the foundations, and then I'll look at this 10-day, 30-minute chart, and then I'm just waiting for short-term trends to develop, right? So if I'm seeing this trend where in terms of the SPY, we have this green candlestick to the upside, a green candlestick to the downside, green candlestick to the upside, I'll buy calls and open in a 30-minute candlestick because it's supposed to be bullish, and I'll just keep on milking that fucking trend. And these short-term trends that I see on a 10-day, 30-minute chart, they could repeat 3 to 4 times within the span of like 20 days, And then if you want to, you can like write down, you can create your own like book or whatever the fuck you want to do. In terms of the patterns that are working best for you, right? You can get more advanced on that. Well, when it forms this pattern, this is what it's supposed to do. But in terms of what I found works best for me, instead of doing that, instead of like trying to remember what all these candlesticks are supposed to do, it's just waiting for them to continue to repeat. Like, look at this, man. Here it is again. You see this, man? Look at this. I don't even know if I mentioned this one. Candlestick to the downside, candlestick to the upside. This was on September 30th. I think that happened like 4 times in the past fucking 10 days. I don't even think I showed you that one. I might have. But you get the fucking point, right? I just prefer to wait. Like, instead of trying to remember, well, like, okay, let's say this doesn't happen in like 2 fucking months, right? But when it happens, it's supposed to be bullish. I'm more on the side, instead of doing that, I do think there's credibility in doing that, but that's where it gets a little bit more complex in understanding, well, which ones work the best in terms of if it's not a short-term trend. A short-term trend is where, okay, this pattern just formed and it just happened again, like next day or a couple days later, within the next 10, 20 days, it's likely going to happen again. It gets more advanced, but that's what I prefer to do. Instead of like, just figuring out which candlesticks are the best, I do think there's value in that and you should do that. I just prefer to wait for them to already form, and then I look for them to form again, ideally within a span of like 10 days. Instead of saying like, you know what, this tends to be bullish, green facing to the down, green facing to the up. It hasn't formed in 3 months. It just formed for the first time. I feel like that's more, in a sense, rolling the dice, but I do think it's important in a sense to figure out which 30-minute candlestick patterns are going to work the best in terms of the ones that, this hasn't happened in a month or two, but I remember what happened last time, right? And then in terms of like development, I like, ideally an hour of pattern, sometimes 90 minutes, sometimes 2 hours, typically an hour to 90 minutes, sometimes 30 minutes, and it gets more advanced, man. In terms of stacks I have with this, I have the key level stack, meaning I look for a pattern at the key level, right? I have the daily chart stack. The stacks get more advanced with the confirmation. It gets very complex, but the complexity is more of just adding on a stack, and all of the stacks are very fucking simple. Once you have the deck, once you have the heart of cards, man. So I hope this helps in terms of some of like the basics with this overall like webinar session I just did for you. And I would really encourage you to go back and watch the previous videos, man. I mean, you can see the evolution in terms of the growth of this overall system, man. I'm telling you, we have this down to an exact T. I wouldn't come on here and teach you something that doesn't work, because in terms of my trading, it's profitable and I trade what it is that I'm teaching you in a sense. I have some trades where it's just pure intuition, but the vast majority of my pure intuition, that just means you're trading with your heart in a sense. you're not even like explaining a technical strategy. That's very real. There's traders, they trade purely based with their heart and intuition, and I 100% believe in that. I have that as well, but I'm more in a sense of like that technical point of view with the technical strategies that I've created. Like the vast majority of my trades, I can actually explain the reasoning behind them, right? Because it's not just like intuition or trading with your heart, right? But with that being said, man, I hope that helps open your mind up to like a new way to look at the overall market. Like I said, man, you have all these time frames. You can do whatever you want with these time frames. I figured it out. 30 minutes is the perfect time frame to make serious fucking gains. And it's the best confirmation that I found to be with all these fucking time frames. And I use the daily chart, use the weekly chart as a foundation. I create key levels. I wait for bull and bear traps to get set. I use the 10-day, 30-minute chart to look for short-term patterns that are repeating itself. My preference is that rather than just saying, okay, it did this on the 30-minute chart when this pattern formed for an hour, or this on the 30-minute chart. Well, if it happens a month or two later, it could repeat again. You can try to figure out which one's going to be the best in terms of that. But what I found works the best is just wait for the 30-minute chart to develop, wait for patterns to form, and then within the next 10 to 20 days, short-term time frame, look for history, look for confirmations of that history of that pattern beginning to repeat itself, and then take advantage. See what it did next 30 minutes, take advantage of the overall trade, have the awareness open, use the stacks. So with that being said, I'm going to be signing off. If you guys enjoyed this lesson and you want to join the program, it's the first link down below within the description. Make sure to subscribe to this channel. I will see you guys within the next lesson.